Dear investor, Edelweiss Private Wealth Management is pleased to present you the latest issue of Investment Strategy Report for August 2017. Let's take a look at key highlights of July. India rolls out the much-awaited GST across sectors with much fanfare. Retail inflation declined to a record low of 1.54% in June from 2.1% in May, according to data released by the Statistics Office. According to India Meteorological Department, the cumulative rainfall received till 23rd July across the country was 103% of the benchmark long period average, while southern India still struggles with poor rainfall. The Union Cabinet approved the recommendations of the 7th Pay Commission on allowances with 34 modifications. The increased allowance, which comes into effect from July 1st, will impose an additional annual burden of Rs 30,748 crore on the exchequer. India-China sees surge in border tension at Sikkim over China's construction of road over common border. The Bank of Japan voted to keep its overnight interest rate at -0.1% unchanged since early 2016. Officials also pledged to continue purchasing Japanese government bonds so that the 10-year yield remains at 0%. S&P 500 reached an all-time high, crossing the 2,400 mark, indicating an improved global economic situation. Tensions in North Korea continue after the regime announced a successful test of their intercontinental ballistic missile. We continue to remain bullish on Nifty and expect it to reach 11,000 by CY18. We believe that we are still at the nascent stages of bull market. Realization of earnings growth in the next 2 years will further drive Nifty growth. We estimate that earnings could grow by 15 to 20% over the next 2 years. Strong DII flows post demonetization and FIIs continue to steer markets. EPS estimates for Nifty Index for Financial Year 18, Financial Year 19 and Financial Year 20 are INR 519, INR 630 and INR 723 respectively. As per blended estimates, Index is currently trading at PE of approximately 18.2 times 1 year forward. We recommend investors to deploy 33% of fresh equity allocation, while the remaining can get invested over a 3 to 4 month period in a staggered manner. Going forward, repricing of fixed income portfolios at lower yield poses one of the biggest risks for investors. Investors should revisit their fixed income allocation and should rebalance their portfolios by investing in long-dated buy-and-hold strategies, preferably with low interim cash flows and instruments, which can potentially benefit from rating upgrades and spread compression. We recommend investors to allocate 100% of their fresh fixed income allocation to accrual or buy-and-hold strategies.